Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Friday, December 30th, more or less the last trading day of the year. So just want to wish you all a happy new year and happy holiday. So here we have a chart of the pound Aussie 60 minutes chart, and we are looking for, you can see we ended with 1 in the intermediate degree and currently within the ABC pullback, right? So we're looking for ABC, and within the select we are looking for 1 2 3 4, and then potentially might still extend or could be complete already here. Alternate, we could be finished here with a 5, or we could extend a little bit more to finish the 5. Now if we zoom out and see what we can expect, the target on the downside, the reason we are calling it more downside is because if you measure the 100% extension of this A and B, and you find out that it has not reached the ideal 100% here, so there's still a chance to go to 176.80, and this is the 161.8 extension. So if this is an ABC, then it shouldn't go past beyond 1.618, because then that becomes a wave 3 typically, right? So here, so basically we can expect somewhere around 100%, 123.6% as a potential target on the downside. And if we zoom out and trying to place this count here, this is the 4-hour time frame, this is the one, and then this is the A and a B. I'm going to paste it here. Now we do have a full analysis in multiple different time frames in the member area. If you do want to check that out, you can try our 14 days trial, and the link is in the description of the video. So you can see right here, if I zoom out all the way with as much data as possible, now you can see that we are actually rallying from the low here, September 26, and it looks like we might have a high sequence, right? So we got this cycle ended here, and then we got this cycle ended here, all right, and then we break higher again, right? And then now looking to correct. So it looks like, by the way it looks, we might be setting up some sort of, okay, so this is impulsive, right? So this can either be an A or a 1, right? Depending on whether it's a bullish market or bearish market. So let's take the more conservative view, call this an A, and call this a B, and then we break higher. So what that means is that this is actually a correction within a high bullish sequence, right? Now unless for some reason it truncates here, but again, if you have a high like this, typically in the C leg should be at least 100% extension of the A leg, right? And if this is not going to extend higher, so this B here is the key level basically. As long as we don't break below the B, potentially we can rally again. Now the only way that we might not potentially rally is if this is doing some sort of expanded flat from this peak here. So we can do an expanded flat like an A, a B, and then a C leg. Now if that's the case, then this becomes a 5 ways down like this, right? So this, instead of AP, this can become 1 2 3 4 5, and then that should be ending the B again as an expanded flat. But again, typically we will not try to forecast an expanded flat, because typically it's not a good idea when you have a high and then every time you forecast, because a lot of times people abuse expanded flat because of their bias. So for example, if my bias is bearish, so no matter what, if it makes new high, I would say it is an expanded flat because I believe it is bearish, right? So so we try to avoid that. So basically, when we do have extension higher, in this case a breakout to the previous high, we're gonna switch to the more natural sort of count, which is basically calling for extension or continuation, right? So that's why we are, I think, favoring more upside here. And again, that means that even though we can see a little bit more downside, but then actually we are not that far away from the support of this pullback, and this is a potential support area here all the way down to this. 1.618, and again, this should be in the key level 174.60. We shouldn't break below that. If we do get a break below that, then we can either call this truncation, or if you look at the momentum, you can see clearly there is a divergence here, right? So that means it is less likely to be an ABC truncated here, because in an ABC you shouldn't have a divergence like this. So if it really breaks below this one, then most likely the adjusted count is going to be something like an expanded flat here before turning higher. But otherwise, if it is not expanded flat, we should expect some sort of support here between 176.80, 175.80, and then shouldn't break below this 174.40 here. Alright, so that's the update for today, guys. So I'll see you all again in the new year next week, and have a nice weekend, everyone.